Hello, friends. We have seen central banks starting to pause the rate cycle, and with that, the optimism about the equity markets or the risk assets have come back, and we have seen equity markets globally doing well in last 1 month. And especially if we talk of India, India has done better than its relative peers, mainly because the economic fundamentals of the economy are far better than many of its global peers. We have seen inflation moderating to RBI range of 4 to 6%. We have seen economy, other indicators doing well. If you look at the high frequency data like GST collection or the auto sales, it has been on the positive side. With that positivity, we have also seen the corporate earnings doing well. And if you look at the results which have been declared so far, has seen a clear trend of gross margin expansion. This expansion has happened after quarters of contraction, and this will ultimately translate to higher EBITDA margins, and which will support the markets. At the same time, if the rate cycle is peaked as what the market anticipate, then we will start looking at the rate moderation in times to come, and that will further help in the margins and profitability. So from that perspective, the markets are looking well placed. And if we look at from the rates point of view, clearly with the pause signals coming, the negative mark to market impact which the fixed income assets saw over last 1 year are behind us, and with a higher, which means that the accrual yield will be higher, and also there is a chance of getting mark to market and positive mark to market impacts whenever the rate cycle starts. Uh, so from the fixed income point of view, I think it is a good time to start looking at, and also to increase the duration of the portfolio going forward. Coming back to the equity markets, I think while we as a country are well placed versus global peers, I think the only risk which exists over there is the global recession fears, which are quite pronounced, especially in the developed market like US and continental Europe. And if that happens, it will have an impact on our economy also, especially the export side of it, because our export, most of it is to the developed. So I think that's the only negative which we are looking at. Other than that, we are well placed in terms of valuations, earnings, and the future earnings expectations also, and which cumulatively gives us a balanced view about the markets from here on. Thank you very much.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.